Hello and welcome to day 11 of the trading series. In this series, I am reviewing all of the trades that were taken during November 2024 for Strategy Wars Season 7. During this season of Strategy Wars, I was participating with the Wave Rider indicator. So I was on the Wave Rider team, and I was also on the price action concept team. So you will see that indicator as well as just like price action marking up that I am doing when I'm reviewing these trades that I took. In today's video, I'm going to go over two of them. There's two of them I placed on November 20th. So I am going to review November 20th's trades. There's a couple of them that are in this markup, this write-up that I have from November 25th. If you're in the trading floor community and you want to see these, you go to the testimonial section and if you go under your stuff like here, you'll see there's a testimonial section. Click on that, and then you'll be able to find this under November 25th, 2024. There are four of them. Sorry, there are four of them that I submitted on this day. I'm going to review for you as the 20th these two trades, and then I'll also go over the 25th in my last video for this series. And then the 21st and 22nd, those videos are actually going to be over on the trading floor YouTube. I'll link that in the description below. It's just because we've kind of already gone over similar styles of those in this series, and I don't want to keep showing the same thing. I want to be able to show you guys a little bit of variety so that way you can see different ways to use this indicator or like how I use price action. But if you would like more information or you just like watching this videos, the 21st and the 22nd, these trades that are written out here and posted in here, those will also be available on the trading floor YouTube. So like I said, check them out. Into the November 20th trades. Let me show you guys what they look like. So you can see November 20th they were taken, and I was using the US 100, and it was about a 1R for the one and about a 1.5 for the other. So total profit for that day was $2,608.60. You the NASDAQ 100, the 5-minute time frame. And basically, we already know, we've been talking about it for a little bit now, that there was a bearish overall stronger bias that's been happening with the NASDAQ 100 for the last like week or so in these videos, as well as the US 30. So I already kind of had a bit of a bias as far as what the overall direction had been doing. But if you remember all the way back to the beginning of the series, the very strong trend that was happening was a bullish one. And then we were dying out of like the bullish momentum. And then I had talked about in those videos how we likely would see a bit of a trend reversal, a bit of a deeper retracement for the next, couple of days or so. And that did end up happening. So we had a really strong bullish trend for a while. Then we had momentum die off and we saw a retracement, which set us on a bearish trend for the last week or so. And now what we're seeing and what I was expecting to potentially see was again a little bit of a shift in momentum potentially and potentially having the trend maybe either start to consolidate for a while or that it may start going back into the original bullish direction because it has retraced enough and deep enough uh, with the bearish trend that we've recently had for the past week. I may have lost you with saying all of that, but in saying all of that, my point is that I am aware when I was doing these markups that I am still going against the bearish trend. But my gut feeling was, and you should not trade with your gut, but my gut feeling was that momentum was starting to die a little bit towards the bearish, and it felt like we had retraced maybe deep enough, especially after this bearish move here. So I'll show you guys on a bigger little zoomed out picture of what this bearish like move looks like. And you can see like we had consolidated. It really did drop again. And I just felt like maybe we either dropped enough here or that a retracement was going to come, like something was going to shift that we were looking potentially for buys. And not that we were necessarily going to go and surpass this high and make a whole new trend, but potentially just kind of like retracing this massive move. So that is what I was looking for because this was huge. This move was huge. There was really no deep retracements, just a very minor consolidations and breaks. So I kind of was of the feeling that maybe we're looking at a little bit of a retracement or a pullback of this move for this day. And, that is exactly what ends up happening, so, my gut was right, but no, it was not my gut, it was what I was seeing in the charts, and it's just the experience of looking at charts over and over and over again, you start to recognize patterns that you're used to seeing, and this pattern for me was that there was just, like, a dying momentum and a really big move, like, one final strong push here, and that's where I was like, "Oh, that big strong push, that fall that we had, it happens so quickly and aggressively that usually when that happens after, like, what felt like, just consolidation, there's some sort of response for it. You don't just have a massive move like this without some sort of, like, answer to it, some sort of retracement or something. So what I was looking for was a confirmation that we were starting to form new structure to the bullish side and we were done with this bearish. So, one was we have this nice rejection candle with a nice rejection wick. This is a pretty classic, like, rejection candle pattern that's happening here at a level of price action that was marked. So, that's good. This is a support level and it rejects off it with a nice rejection wick. Then we get a little bit of a push up. We get some nice bullish pressure happening, but this still isn't enough for me to just go jumping in yet because there's really no structure being formed to prove anything. It's just saying, like, hey, we have some bullish pressure. Then it comes up here, kind of taps on a level that I have marked, and then it comes back down to this zone that we had again, taps here, rejects off it, pushes up again. A nice, strong, bullish candles. And at this point, that is when I was seeing the structure starting to be formed. So we have your low, we have your high up here, we have your low that this is your new low. It's not as low. So you're forming a step like pattern. Then you have a new high, a higher high up here. And that was when I saw this new higher high being formed that I was like, "Ooh, I think we are going to go a little deeper into this." Now, I only took the trade at this point because again, we're creating structure, but I did not want to go too crazy and go past this zone. I didn't think we would even go up to that zone, to be honest. I mean, in hindsight and looking back, yes, we did. But at this time, I wasn't sure we were even going to do that. I just thought we were going to have a pretty deep retracement. So I was not going to target the top of this zone at all. Initially, I will be honest, initially my thought process was when it got here, I was probably going to just manually close my trade because I didn't want to risk losing the trade, or I was going to at least make it like break even, risk free at that point. I just knew that this was a number for me. This level was an area where I did set a price alert so I could pay attention and decide what I wanted to do when the market got there. So that was an area I wasn't entirely sure about, but I did want to just see how things would play out before I went and committed to anything at this level. But when I marked it up, and after obviously looking at the market, I still decided to stick with where my take profit was for trade one. And that was kind of like this, like mid level of heavier price action that's happening within this zone that's to the left. So my entry point was because we did have this breakout, we created new structure, we got a new high. My stop loss, unfortunately, because we broke through so strong, I couldn't really safely place my stop loss anywhere because we hadn't retested it anything yet, like in any of these zones. So I have to go but the lowest air, like the most recent low, which was underneath here. So that's a pretty heavy stop loss. It worked out to still be like a 1R. Like I said, like it's not the worst. But yeah, this wasn't the best either as far as like a risk to reward, but there really was no other option for my stop loss because there's nothing in here in these strong bullish candles that's showing me like a retest or a rejection area or a price that has already been tested and it pushed off of. So I have to stay on the safer side and I have to go under the low here. And, that is what I did do there, and it worked out to be good for me because it does come back to retest. So you can see the market pushes up, it comes back down, retest this level, so it's a good thing I didn't put my stop loss right under there and that I did keep it under that low because it needed to retest, and it needed to retest pretty significantly because this was a strong bullish move. It needed to come back and retest. So it comes back, it retests, pushes back up, kind of plays around a bit, actually tests in this zone too, which is fair game because again, it pushes out of both these zones. It breaks this zone and breaks this zone. And it never came back during that whole bullish move to come back and retest. So even though it comes back here, it doesn't fully come into here to retest. Wicks don't really count, in my opinion, to fully retest. So you need to have the body of a candle in there, in my opinion, to fully retest. So this zone is still kind of free play until it was retested. So I wouldn't have moved my stop loss at that point either because it still could potentially not have fully retested completely. And it didn't. So I'm glad I didn't move it too quickly. And yeah, so anyway, that was that. So that's trade one. I left my stop loss where it was because of that fact that it could have retested again in here still, and it did. So I did get really lucky, I guess, that it didn't come just even a little further down. But yeah, I did luck out here a bit, I guess, and, the retest of this zone was just missed where I was at, but then it does come back up, and I eventually get my take profit. And for trade 2, similar idea, except, as far as my analysis of looking at the overall picture of things, it's a similar concept, except that when this, like, deeper retest starts happening, I get in for a second entry because I can get in at a better price. So, like I said here, where I was getting in at, like, a little bit higher up, there is a difference in price here because this was such a strong bullish movement and I had to keep such a heavy stop loss. Getting in with a little bit of a better price during this, like, retest that's happening here, this little dip that occurs. I'm getting a cheaper price essentially for the same move that I'm doing in my head as far as an analysis goes. So this to me does kind of count as stacking, even though they aren't as close together as you would think, like time wise, because each of these candles is 5 minutes. But the idea of like why I'm entering is the same. It's just like it's giving me a better price entry. So I did take a second trade here. I was still pretty confident in this move, like, I didn't see anything that would make me feel like I shouldn't get in, so I was able to get in, and like I said, like, this all the same stop loss was, same concept behind it, there wasn't a reason for me to change it. The only thing that I did change a little bit here was my take profit, and, like, I kinda already told you guys I was kind of interested in the support of this zone, and, it just I ended up closing them both out at this area. Like I said, eventually this one would have hit this trade one. It would have gotten up there, but in a while, as you can see. But yeah, after you go into drawdown, like what you're seeing here and you're watching it, takes a lot sometimes mentally to watch yourself go this much drawdown, especially when you have 2% of your account or so running. That's a big hit sometimes to your mental game. Seeing it actually push back up again and even getting like back into profit and getting close to this and getting that alert that hey, it hit that number. What do you want to do? I'm not gonna lie, guys. Like these are 5 minutes each. This felt like forever when you're in drawdown like that, like to get out of it. If you know, you know. You know what I mean? I just mentally was, like, done with these trades at that point. So, when I saw this number hit, I said, "Good enough for the day. Let's close it up. Like, we are done buttoning it up. We're done. I'm not trailing. I'm not securing. I'm not doing nothing. I'm just closing out and taking my profits, and I am done for the day." So, I did do that. And, just so you guys have a reference, like, this is later in the afternoon too, like, when this is happening. So I did know in my head as well, like, there probably wasn't going to be too much more volume happening after this, like, level was hit, this number was hit, this 20,700 area was hit. There wasn't much else to happen in the market for the remainder of that day. It was likely going to go into Tokyo session, and sure enough, it does. It goes into Tokyo and into London, and it just consolidates. So, it would have definitely made it the next morning to my take profit, but I didn't really wanna sit and play the woulda, coulda, shoulda have game. This is getting closer, on my account. I will show you guys. At this time, we're on the 20th. I will show you guys what the profits look like. This is including the 21st, so if you take out that $159, you can see I'm kind of, like, close to at the time, I was closer to, like, 22,000-ish, 22,000, almost 23,000 on this account. With those 2 trades being closed out, with these 2 being closed out, I'm getting closer to the end of the month. I'm pretty much at what I like to make for my monthly goal for the most part. I like to stay in that 1,000 to 25,000 range if I can. And, once I see those, I tend to get a little more like take my trades, close them out, or I tend to get more like secure 'em kind of type of vibes where I don't want to lose the money. I don't want to have to lose what I made, especially if like I'm meeting my goal or I've met my goal. Anything after like 20K, that's just like extra, that's just like sprinkles on top of my Sunday type of thing. Okay. So that is it. This is it for the day 11 trades that I took. And I will be back tomorrow for day 12. That'll be the last day of the Tradesmas series that I'm doing here. And it will be November 25th's trade that I will review for you. That was also the last day of Strategy Wars. So if you guys want to see like what does the full account look like, I can show you the video now just so you can kind of watch through. But the last day's trade, the one you'll see tomorrow, is $892 that I go over. And and then just that's the monthly view that you're seeing there of just like what this full account look like, all the trades that you saw me take throughout this series. I did skip a couple of days, like I said in the beginning of the video. There's 4 different trading videos that you're going to see over on the Trading Floors YouTube channel. So if you want to see some of those days that I kind of like skipped over because we already maybe covered something very similar to those types of trades, check out the YouTube channel for TTF. I linked it in the description box below. If you are following this along in real time while these videos are being released, then Merry Christmas Eve for those of you who are celebrating it. And I will see you all back here for tomorrow's video.